Finance and the Council and Council Controlled Companies Organisation Committee. Just to welcome you all here on Zoom again from Berwick. I'm speaking. Behind the GSO team, we've got Mrs. Wendy Collard and other people you can see. First up, I'd like to say that there's no public forum today and there's no apologies, so we'll move straight through to confirming the agenda. So I just move that we confirm the agenda as it sits. I've got a seconder there, Councillor Benson Pope, thank you. No discussion, or I assume there's no discussion, so we raise our hands to agree with that. All in favour, say aye. Anyone against? No, that's carried. Thank you very much. I now point to the declarations of interest. It was written in a font on my that I could not read, but I assume any changes. Councillor Lafiso.
Tēnā koe, Mr. Chair. I have changes, 3 of them. The Otago Mental Health Support Trust, I'm now the chair. Being the Pacifica Dunedin branch rep on Araitiuru Marae Council, I am that representative no longer, and I'm, this is a new one, the Women of Otipoti Recognition Initiative, I'm a committee member. And I've updated that with Ms. Adamson already. Thank you.
Thank you very much, Councillor Fiso. Is there any other changes? Okay, well, with that, I move that we note the amendments and the elected members' interest is attached. And I'll just call for seconder on that. Thank you, Councillor Staines. All those in favour, please raise their hand, say aye. Thank you. Anyone against? That's carried. Thank you. Okay, now we go to confirmation of minutes from item 5, which is the Finance and Council Controlled Organisations Committee meeting from the February the 9th. I just moved that those motions are true and correct, also noting that we still have to get back to the results from Councillor Anders's query on monies paid to the stadium. So that's still coming up and will come with our February accounts. So with that, I'll move that we note that. Any seconder? Thank you, Councillor Vandervis. Any speakers? Okay, I'll put the motion. All those in favour, please raise their hands. Thank you. Anyone against? No, that's carried. Okay, now we'll move to item 6, which is the, oh gosh, I've missed my line there, can't see it. The Finance and Council Controlled Organisations Forward Work Programme. So if it's on page 21 of our agenda, is there any questions on that? I can see heads nodding. I can't see any hands raised. I'm also happy to move. Was that a hand? No. Councillor Benson Pope.
Thank you, Mr. Chair. Just a question about the absence of any reference to the decision. I'm not sure exactly what status it had, but a decision made some time ago to investigate methods by which we could incentivise inner city housing conversions to accommodation, particularly in the CBD. Somewhere in the organisation, council asked for that, but I've repeatedly asked for a report on the fate of that request, and it sort of seems to me that it's something that should be in this forward work program. So I wonder if the Chief Executive or someone can respond.
Sorry, we've got to put a space bar down. It's on the action list, councillor, so but I'll just make sure that that's there, and then we get that on a work program in terms of trying to deliver a report to respond to that query.
Excellent, thank you.
No other discussion. Councillor Walker.
Yeah, thank you, Mr. Chair. And I'm prepared to be corrected here because it might be the wrong place to ask this question, and it's probably to Mr. Logie, but I'm happy to hold it over to another section if it's not appropriate. It's basically a question around Russia, because we do have the Waipuri Fund and DCHL obviously on this forward work program, who oversees city forests. So the question is basically, do we have any interests in bonds or shares connected to Russia through Waipuri, and or do we do any trading via Waipuri into Russia? And if so, do we need to talk about any potential future consequences of that?
So I wouldn't have that information to hand, councillor, but we can certainly look into it. I'll have a look at the SIPO, which is the investment guidelines for the Waipori Fund, but we can respond to that in the future.
Yeah, thank you. There's just something lingering in my head that we might have been, City Forest might be doing something in Russia, but I'd really like to know the answer to that so we can discuss that as a council. Thank you.
But we'll have Ms Adams and Mr Cooper shortly in the meeting, so it's a question you could ask them directly.
Yeah.
Noting that that would be slightly different to anything which is in the Waipori Fund, so that's two different kettles of fish. But yeah, I think if anything, it will help our case if they're not shipping logs out of Russia. Well, if there's no further questioning, I'm ready to move that we accept that council forward work program. Got a second to Councillor Wiley. All those in favour? Any discussion? All those in favour raise their hands. Thank you. Against? That's carried. Thank you. Now moving on to the finance report, which is the financial result for the period ending the 31st of January 22. Mr Logie, have you got any comments you would like to make? This is item 7.
Probably just to obviously highlight to councillors the impact of the events in Eastern Europe on the Waipori Fund. It's fair to say the equity markets got the jitters in January prior to things happening. We just had a quick look at the results for February, and again the market's down again in February, just again reflecting the nervousness of equity markets when these things are happening in the world. Probably the only other thing to mention is that as at the end of January, we hadn't received any funding in relation to the Taieri Aquatics Facility or the Moscow Pool. $3.2 million of that was received in mid-February, which will be reported to the council in the February finance report. Other than that, happy to take questions on the substantive report.
Have we got any questions? Councillor Walker.
Yeah, thank you again, Mr Chair, and thank you for the report. My question is around, it's on page 39. It's basically the way you talk about the transport issue and the phasing of the budget lines. Can you just talk me through that in terms of what the problems have been and what the best form of rectifying this so it doesn't happen in the future?
So sometimes when people do budgets, they split the budget divided by 12, when in fact some work is carried out on a seasonal basis. So we will be talking to the finance personnel that sit within transport around the phasing of those budgets so that they match the delivery of the program.
And obviously that's something that's pretty straightforward to do.
Challenging if the weather changes, but certainly it should be done in a different manner to just dividing by 12.
Sure, thank you.
Councillor Raddick. Raddick, please. Councillor Raddick.
Thank you. Just a couple of questions. Firstly, in the operating surplus graph on page 28, there is no last year to date line, unlike the other two graphs. Is there any particular reason for that? Because my understanding is that last year would have run in deficit all the way to the end, but why is there any reason why there's no last year to date line there, Mr. Logie? Somebody? Sorry, we need to hold that space bar down for Mr. Logie.
Sorry, we didn't hold the space. The challenge with that is the surplus is affected by some of that capital funding we get. So that can include things like the money for the Mosgiel Aquatic Facility, which is $4 million. So that would make variability in those numbers, which makes it difficult to compare. Whereas year on year, you would expect your capital to be in a similar line or trajectory, albeit that the trajectories may be apart from each other, and same with cash flow. So those two you would expect to be the same.
Right. Okay. Well, that makes sense in terms of the operating surplus. And no, that's fine. I've got a question for the next item. Thank you.
Thank you. Councillor Vandervis.
on page 40, it says that there was 333,000, mainly due to rent relief provided for commercial tenants during lockdown. Why is it that we are providing rent relief when I had understood that the government was supposed to be doing that?
It was a decision of the property team in relation to the investment portfolio. Again, I'm not sure what funding those organisations or those tenants were accessing from the government, but it was a decision made by the investment team.
So the investment team would have made that $333,000 decision under what authority?
Again, it was consistent with what we'd done in the previous lockdown.
The authority being?
Group manager.
Well, ultimately, the authority is mine, councillor.
So you have, for several lockdowns now, thrown $333,000 at commercial tenants that I'd understood the government was supposed to be paying for.
Not for fixed costs.
No, not with these fixed costs, councillor, and it was in line with what this council's position was around how we supported the community in a variety of ways, including we did support in the arts and culture space. We also have done support for commercial tenants where they needed to, where it was needed.
Was a significant part of this George Street commercial tenants?
I would have to.
Wall Street.
Yep,
Yep.
Some of it was Wall Street, we believe.
Right. Okay. I'm just very surprised to have read that. Did we as councillors ever get any advice that this was happening for commercial tenants?
Yep, it would have been traversed at the first lockdown, certainly.
And one of the other COVID updates that was provided to councillors did mention it, but it may not have given specific numbers.
Thank you. Going back to the recommendation for item 7, which is that we note, amongst other things, the financial position at that date. The financial position, is that materially affected, or could it be materially affected by the fact that we still don't have a stadium valuation? And the auditor has highlighted issues with not having a stadium valuation and not meeting accounting standards requirements. I think the accounting standard number 36 as a result. Is the financial position able to be affected by any significant change in the stadium valuation?
No.
So we can happily vote for this and deal with the stadium valuation issue later.
That's part of the valuation in relation to DCHL and the stadium itself. Yes.
Thank you. That's all. Thanks.
Thank you. Now, Councillor Raddick, you've still got your hand up. Is that another question or just not taken down yet?
There's another question.
Okay, go ahead.
Okay, thank you. Just a minor thing which you may not be able to answer actually, but on page 40, I noticed there was $2 million of unbudgeted expenditure on stimulus funded project work. So, you know, we got the stimulus funding, and did we just decide to do extra work as part of, you know, what we had budgeted for, or the, you know, shovel ready project that we had, or what happened there? I was just curious about that, because I don't recall seeing that in earlier Three Waters documents and discussions at the committee meeting. But I'm just curious what we spent the $2 million extra on. But I mean, I'm sure it was good, useful stuff. But
so again, I can't comment on the detail of what it was spent, but however, the stimulus funding has specific criteria that you have to fulfill in order to claim the funding. And we couldn't use that stimulus funding to fund things we were already doing. So this was additional work.
Yeah, look.
And some of it will be data collection.
Sorry?
Data collection on the network, for example, is a line of expenditure that we would probably be able to claim under stimulus funding.
Okay, look, thank you. That's fine.
Councillor Hall, did you still want a question?
Yeah, just in reference to the rent reduction.
government recommended to most tenants that they talk to the landlord over the COVID lockdown about reduction in rent, and a lot of them got 75% reduction from their landlord throughout the country.
Yeah, thank you for that contribution. I think it'd be fair to say that if a lot of people hadn't got it, they wouldn't be in business today. Any other questions? Councillor Benson-Pope.
Thank you, Mr. Chairman. Mr. Logie, a question. Is it not the case that one of the reasons for the work I asked about earlier was to have quantified the cumulative amounts that we knew we were putting into supporting our community?
Correct. And we've undertaken to provide that information by the end of the financial year.
Thank you. So the fact that we were supporting business tenants is no surprise to anyone.
Well, that would be a decision for councillors, or a question for councillors.
It's a statement.
Yeah, any other questions, Councillor Benson-Pope? Thank you. I had a couple. One, probably for the chief, the underspend in personnel costs. We'd budgeted to spend 1.6 million more than we have. My question relates to that, and is it that we are finding it difficult to fill some positions, or are you just holding off because right at the moment you don't need those positions? Or I did see the commentary that there's staff we haven't got, but
Sort of reflect recruitment delays and challenges to a large part.
So if you had the opportunity to have those staff here today, you'd have them here if you could find the right ones.
Yes.
Yep. Okay. Thank you. The other question was to do with the capital spending, Gavin, and I'm just looking, when I look at the close up of by departments, I did have the page in front of me, page number 32. I looked that Three Waters have almost drawn down on their full annual budgets and their spend, and some other departments are making very slow progress on theirs. And I realise there's reasons, like, for example, the property department, there's some jobs are taking a bit longer and that sort of thing. But is there any issues, Chief or Gavin, that some departments, while we might still spend the right amount, some departments are going to struggle to spend their CapEx?
It's fair to say that there will be some departments that you've identified that will struggle to spend all of their CapEx this year, but the budget, the 10-year plan budget, has projects that are identified that span more than 1 year. And so what we are doing is flexing a little bit. So say if we're not able to deliver a property project this year, it'll get delivered next year, but at the same time, we might bring forward some water work, for example.
And that'll form part of the update that we provide to council in May for the 22-23 annual plan.
Yeah, it almost looks as if Three Waters at the current rate they're spending will have spent their full annual budget before they get to May. So is that something that you'll just jiggle around, is probably not the right word, but something that the senior leadership team will just manage as they come to the end of their works? You'll just feed more work to them.
So the work program for some of the Three Waters stuff is now well advanced in the planning. And so it results in part from a change in how we're procuring things. So we're a lot better at getting pipes in the ground more quickly, which is a great outcome. And so we are further ahead in their 3-year program of work than we thought we would be. And so they will spend this year's budget and some more, but we'll report on that in May. But it just speaks to us getting some of the stuff done that we've needed to get done.
Any concerns about the transport being sort of comparatively behind where you might have thought they might have been?
You know, I am concerned, and Mr. Drew is also concerned that we might not be getting as well through that budget as we need to. But partly it's phasing issue because the ceiling program and a lot of that work should be well underway now, and so that should have been factored into the timing of the budgets. But at the same time, I think looking at where they will struggle to meet budget this year, but they're just a little bit behind on that journey where Three Waters were a year or two ago. So it takes a bit of time to get the planning in place, and I'm confident that they're starting to get that work in place so they can start to smash some stuff out next year.
Okay, thank you for that, Chief. Councillor O'Malley.
Thank you, Mr. Chair. It's really just following up on that and just sort of some conversations I've had with Mr. Drew. Is it that in fact we are to some extent a little bit of victims of our own success in Three Waters, and that what's happening is because some of our providers are doing both transport and Three Waters, that they have moved some resources over to Three Waters, and now it's a matter of bringing transport up to the same kind of relationship so we can get more capacity into the city?
Yeah, there's an element of that, but there's also with COVID, there is capacity issues just generally as well. And so we're needing to balance where we put the work so that the contractors don't pick and choose, because we need consistent delivery across all of it. But Mr. Drew and his team are doing a really good job in starting to have those conversations with the market.
Well, they've certainly flagged the issue, haven't they?
Yeah.
Yep.
But I think broadly the capital program is a really good result when you look at how much we're getting delivered, and it's mostly in the right places.
Agreed. Thank you. Any other questions, Jim? No. Okay. Councillor Elder.
Just a question related to that. Are the departments finding that there's supply issues that are holding down their works at the moment?
Just starting to see some
People issues.
yeah, and largely it's people issues, and the areas that we work in don't rely on jib board so much. For example, if we were building, there clearly some issues in those spaces, and we've had some, because we've got long-term contracts in place and good programs of work that can be delivered. The market's been able to gear up and make sure that they've got supply of material. So, but it's labour will be what holds us up, I think.
Oh, that's excellent.
I see no other hands raised. So if there's no other questions, do I have a mover for the report? Doug, a seconder. Rachel. Sorry, Councillor Hall and Councillor Elder. Thank you. Doug, would you like to speak to that at all?
No, thanks.
Any other speakers? Well, I'll just comment that I think this is a good result. I'm reasonably. It's scary just how close some of the spending is to the actuals, and even some of the forecasting of rates. I've never seen it quite so accurate and close before. I understand what you've said, Gavin, about the Russia and what's happening with perhaps COVID, not COVID, the Waikori Fund, but that's not the subject we're discussing here. But by and large, I'm reasonably happy with this, and I certainly commend the team. When I say the team, I'm thinking right across the whole of council that are managing to achieve the results we're achieving, particularly in the fact that we're now spending more on our capex than perhaps we might have spent in a decade. We've got significantly high years forecast in our budget. This is year 2 and it's going pretty jolly good. So, no, it's first complete year, but we're going right on track. So I'm very, very happy about that. So, right, a reply, Doug?
No, you said it all.
Okay, well, if that all in favour, I'll put the motion. All those in favour, please raise their hands. Against? It's carried. Thank you. Now, if we can invite Mr. Cooper and Gemma into the room, we've got item 8, which is the annual reports for the companies. So I'm just going to have a wee shuffle around and get them over. Statements of intent, Mr. Cooper. Anything you'd like to say?
Are we going straight to statement of intents or annual reports first?
Sorry, we were going to do.
Your call.
No, we're going to do. Annual reports. Sorry, getting confused. Number 8, annual reports for the Dunedin City Group. The Dunedin City Holdings Group.
Good afternoon, everybody. So if I just give you a quick context on the annual reports, a pleasing position, a $26.1 million profit versus an 8.6 forecast loss. However, that was principally driven by city forest revaluations, which are non-cash. And of course, there was a better than budgeted result from Aurora, which does have a cash benefit. So overall, a pleasing position. Nonetheless, it doesn't deliver the much talked about dividends to DCC, which still remains forefront of our minds. The reason why these are delayed, was, as you're familiar with, has been caused by audit, firstly, and then secondly, when they did discover an error that dated back to 2006, to do with consolidations between Delta and Aurora. It doesn't affect the result per se. It's just when consolidated, the intercompany transactions were done incorrectly. So that took much work to redo back to 2006, which meant that we had to find another slot with Audit New Zealand to do our annual report. So the combination of those two factors results in us being here today somewhat belatedly. Probably a key point to highlight is the carbon footprint reporting, which we'll put on there now, which will form the basis of future targets. So it's very much a starting point. And secondly, as we move towards reporting against ESG matters, the diversity tables, and these will continue to develop as we benchmark ourselves and embrace as appropriate NZX style reporting for those matters. So with that quick introduction, I'll hand back to you, Councillor Law.
Yeah, thank you, Keith. I'll go straight to questions now. Councillor Barker.
Thank you, Chair. I have a number of questions that I'll just quickly work my way through. On page 11, it had, in the summary, which is great, it had an amount of $1.9 million paid off stadium debt. And I wonder if there was any stadium debt paid off this year.
Which page 11, but there was some stadium debt paid off.
In the previous annual report, it just had that figure, which I thought was kind of useful.
Oh, and last year's annual report.
Yeah, and I just wonder why it wasn't on the front page of this year's annual report, or in those statements.
The highlight figures.
Yeah.
Yes, it'll be declared in Dunedin Stadium Properties annual report how much. We tend to run those highlight figures based on kind of just more topical or more interesting reports across the group. So there's not a particular science behind what goes in those highlights. But I'm happy to look up for you, and I can perhaps either circle back later or find it relatively quickly on how much debt was repaid over 2021.
Thank you. It's just always a question that's high in people's mind. And the next question is around, I just wondered if it would also be useful to have the numbers of people employed. I saw it was in the diversity table, but that would be quite useful as well. I see it's 796. Page 37, the group financial statistics, and previously this was for 6 years, so you could see quite a trend, and because COVID's given such a big chunk out, it's good to compare to what happened previous to COVID. So is there a reason why it's now 5 years instead of 6 years?
5 is just a normal. I'm surprised we had previously done 6, but I'll take your word for it. 5's the normal.
Okay, thank you. The next question is page 91, and the 2019-20 DCHL annual report had statutory information on the directors of DCHL, and it was the appointment dates and declarations of interest. And is that no longer required by regulation, because it's missing from this one?
The director's interest register. So I've still got the dates of appointment are still under there, under statutory information. I remember we added one in right at the back. So the appointment dates are there on page 95, page 86 of the DCHL annual report. In terms of their register of interest, if you can leave that question with me, I'll come back with either page reference.
Yeah, because it's like 500 pages, so it's quite challenging to find some of that stuff. The next question is just obviously.
Excuse me,
Sorry.
Sophie, can I just interrupt you there? I did read Mr. Cooper's in there, so it is in there somewhere. I can't tell you
Okay,
the page
yeah.
number, but I
Yeah,
have read
thank
them.
you. Yeah, good. Had challenges finding. The next one is obviously on the International Women's Day theme and break the bias. And it was good to see the reporting on gender diversity and hear about the NZX stuff. And I just wonder what's being done to close the gender gap.
In terms of at the governance level or management level?
All of those, because you've got reporting on the governance level, reporting on the management level, and reporting on the employee level. And it's great to see the reporting, but I just wonder if there's a strategy to try and break the bias, I guess, and uplift more women into being able to work for our city companies.
I know we've got particular focus on diversity in general across the companies. Obviously, we're dealing with the chairs and the boards of the other companies, so they clearly understand that focus. However, they're also mindful of they also need to get the right people for the jobs as well. So it's a balance between those two factors. But certainly at governance level, I think we're sort of reasonably well balanced. There's a couple of companies there based on rotations. We'll get that better. In terms of the management of those companies, they are conscious of it, but equally they're conscious of getting the right people for the jobs as well. So it's a fine line.
So is that something we could address in our statement of intents, because we've got strategies around carbon, sustainability, etc., that we could think about?
I'm not so sure it's something that we do as a normal course of business, best practice, and we've got focus on it. I'm not so sure we can have a formulaic approach to say we must do this or must do that. You know, it's a challenging environment to get people at the best of times without further constraints. So the best thing I can say to you is it's very much forefront of mind, and companies and at governance level, we are focused on it. But that doesn't mean to say we can just change the mix overnight.
Oh yeah, I was looking forward to seeing some aspirational targets. My next question is around the independent auditor's report and explaining in plain English what the reasons for the qualified opinion are. Is that, Councillor van der Vis brought up earlier, is that around the stadium valuation?
Yes.
Okay, thank you. And my last question is just around Aurora, page 113, and around the pricing. Some people have got their bills, and I wanted me to ask this question. Can you expand on the background of the paragraph about the reduction in prices to Central Otago customers and it being recovered from Dunedin customers? And I know there was that they went out to consultation, and there was a lot of consultation from Central Otago customers, and wondered whether the Dunedin customers had a loud voice as well.
This was work undertaken early on in the financial year we're looking at, covered by the annual reports. There was some direction from the Commerce Commission. I recall that they needed to review the pricing model across the 3 regions. That was undertaken in conjunction with the Electricity Authority, which meant there was some relatively minor adjustments based on reviewing the model, which apportioned the cost between the 3 regions. So I wouldn't, also it may read like one's subsidising the other. It's not. It's that the fact that they revised the model based on latest cost structures, and it's designed to reflect the costs of delivery and servicing power delivery assets within those regions. So it was,
okay,
it was a rebalance which was independently verified by the Electricity Authority.
Okay, thank you. The paragraph didn't quite make sense. Thank you.
Thank you, Councillor Barker. Councillor van der Vis. You might need to unmute yourself, Councillor van der Vis.
Pardon me. Thank you very much. I need to lick my
Evan.
finger. I think that didn't quite work. On page 6, we've got of 517, we've got Dunedin Rail Limited and DVML reports still not available. The issue for them still not being available, is that resolved, and when do they expect to arrive?
Simple terms, there's no issue in terms of us supplying the data. They were deemed to be immaterial in the scheme of things, and they were put on a slow burn by Audit New Zealand in terms of when they're going to get to do the audit. They're scheduled to be done
March for Dunedin Railways and April for DVML.
Okay, and the audit error that you mentioned earlier on, the Aurora Delta split error that goes back to 2006, why has it only been discovered now? Why did audit not discover that many years ago? Why has it continued?
a very fair question. It passed through for 13 or 14 years of audits and wasn't discovered, and it was obviously the audit team this year, when they went through the working papers, found that it wasn't done correctly.
Okay. I understand that we've used the same auditor for quite a long time now, and was wondering if you've looked at perhaps using another auditor, perhaps the different auditor that the ORC use.
We've had different audit teams over. I think we've probably had certainly different audit leads over those years and different audit teams. And we're currently bound to use the OIG to do the audit work. So there's been various eyes over it, and the various eyes didn't discover it, and nor did the various staff that operated the system discover it either in terms of their normal course of business.
Yeah, I understand that, but my question was, given that we keep using the same audit business, albeit with different people fronting sometimes, have you looked seriously at using another audit provider altogether?
That would be something for the DCC to consider, because we're part of the group which the Auditor General audits.
So are you saying that the council is actually in a position to perhaps get a report on whether an alternative auditor might be considered?
As I understand it, you'd need to seek an exemption anyway, but we would take the lead from Dunedin City Council on that.
Okay. If we go to page 13 of 517, which is a very helpful summary that you've provided, there's the $5.9 million interest on shareholders advance, which obviously we're always grateful for. But I'm looking at the City Forests record 36 million profit. And you said that a significant chunk of that was due to revaluations. Has carbon price also affected that?
Carbon, it will be embedded in there, but the significant part of it was the forestry revaluations.
Right. So of that 36.9 million, DCHL only got 8.2 million as a dividend. Is that because City Forests have gone out and bought more land or more farms to turn into trees? What's the reason for us only, if you like, getting 8.2 million?
Because the revaluation was non-cash, so it's just a book entry. It didn't actually generate any cash flow from which to pay.
So the revaluation is in fact a very significant part of that 36 million.
Absolutely.
Can you give us some idea of what percentage? Would it be half of it?
More than that.
More than that. Okay. Right. Just moving on to interest rates, it says, or you say in that summary, that interest rates actually softened 0.87% down to 2.49%. And obviously that's been of a great relief to us with so much debt. What are the budgeted interest rates that you were looking at for 22, 23 and 24, for instance?
Still working on those. So we usually provide those to companies in DCC around April, May, when we've got a bit more market information. Current year, I think 265.
Yeah, the current year, which we're now, we've got a rate of 2.65 the companies are using for budgeting purposes.
Right, but you must also have forward budgeting, and I have asked in previous meetings whether we could have a look at the 10-year forward budgeting that that you do with the companies. What currently are you anticipating in terms of 22, 23, 24?
Yeah, that's what we're currently working on at Treasury level. So current year is 2.65, and the forward projections for the next financial years are yet to be set. They are unlikely to be vastly different based on our hedge position.
Right, but given that there has to be some proper forward long-term forecasting, I mean, do you have a 10-year forecast budgeting system, for instance?
We certainly have projections, but we don't. The companies don't have that as an adopted position within their budgets. They do for their 3-year outlook for the SOIs, which is the figure we're yet to set. We've got a reasonable level of certainty, but it is fluid given that we're not fully hedged under the hedging policy that we have. So there's no fixed long-term projection that we have. It's set annually.
So are you saying that the longest future projections that you do are only 3 years at this stage?
No, because we've got a hedge book that's longer than 3 years, but the mix between our hedging position, which spans up to 8 years off the top of my head, and what we'll pay as we work through those years, the cumulative rate of those two factors will vary from 1 year to the next. Okay, thank you. On page 21, you're talking about the measuring and reporting of companies' carbon footprints. Have you got a rough idea of, you know, it is the first time you've done it. Have you got a rough idea of what the cost has been of measuring and reporting in the company's carbon footprints?
Yes, I mean, we haven't gone into the detail of the allocation of staff time at the companies, but I think it would be in the, I'm trying to recall the invoice off the top of my head, but it would probably be around $20,000.
Would that have been just for the external auditors, or the external advisors, should I say?
For consultants and setting up, spread the
so it would have been $20,000 for the consultants plus staff time and gathering the information.
Yeah, I'd prefer to come back and confirm that figure. That's a
no, that's fine. No, I just wanted to get a rough order of what that was costing us. Especially since it seems to me that reading the report, there's very little we can actually do about carbon footprint in the companies anyway. I note that in terms of measuring your tons of CO2 equivalent, we have virtually no movement available in Aurora because the losses are just a given. Through the distribution system, and that elsewhere there doesn't seem to be much possibility of actually doing anything about those emissions anyway. The native trees, I think there's 7,000 tonnes of CO2 equivalents listed there as being something that would be a more permanent carbon sink. But in the report, it says that it's challenging to influence emissions for Aurora. Would perhaps impossible be a more accurate word to use?
I think the old adage springs to mind. If you don't measure it, you can't manage it. So the process we've gone through here and the focus we've put on it has brought it to the forefront of everybody's mind, and has created a focus on it. So it's a starting point. We will, the inroads will be made to decrease their footprint. Whether they can solve the big problems, City Forest has got the shipping one, Aurora has got the leakage, but it's already exposed the fact that Aurora has to adopt a nationwide leakage on their lines, yet they've got a local source of power down in central Otago principally. So as and when the national body changes the allocation of the leakage and the lines to more fit the demographics, that will see Aurora's leakage assumptions decrease as well. So I think the focus this is creating is the powerful point at this time. And surely we will get to a point in the years to come to say, okay, what is the impediment to undoing this, what seems to be an insurmountable hurdle? And we may have to, in fact, live with things we actually can't change ultimately, but we're not at that point yet. We've got to get to that point.
Okay, thank you. If we go to page 96 and 97 now, and return to the value of the stadium, and you've said before that this is one of the reasons that the audit is qualified, sorry, the audit's qualified. The issue of the stadium valuation came up last year as well, as I understand it. Why is it that there has been no movement on actually calculating the stadium value and therefore being able to remain within the accounting rule of NZ 1AS 36 and satisfying the auditor that things have been properly accounted for, because it's a very big lump of money that surely must affect a whole lot of the other accounting procedures that we have.
It doesn't affect, there's purely a consolidation issue, and it doesn't affect the other companies. The fact of the matter is we can't identify or get anything like an accurate valuation of the stadium. We know what it generates. If you use the discounted cash flow method, it would come up with X value. If you've got another valuation method, whatever that may be, to value a stadium, it would be Y value. So trying to identify a realistic value on an asset which arguably isn't marketable would only distort things. This has only arisen from when the ownership of the stadium was put into the DCHL group. And because it's a not-for-profit, it means that we have to treat it on a commercial basis. And we're saying we can't because it's actually, it's not a marketable asset. So this has only arisen once it was transferred to DCHL. If it was sitting in DCC directly, it wouldn't be an issue. So we've opted to treat it as if it was in DCC, given that we're operating from a custodial basis only, not from an accounting basis.
Are you saying that it would, or in fact should, be sitting on the DCC books rather than having been unloaded onto you?
No, I have no opinion. It's just a perverse outcome that once it comes into the DCHL group, there's an audit application that wouldn't have otherwise occurred within DCC.
Right. Well, look, thank you very much for explaining those things. I probably have a few more questions, but I've had a fair whack. Can I give someone else a go, Mike, and come back later?
Thank you. Yep. No, that's
Thank you.
fine. Councillor Walker.
Yeah, thank you, Mr. Chair, and thank you, Mr. Cooper and Ms. Adams, for what was an excellent report, actually, and some good news in tough geopolitical times. I don't know if you were listening in earlier, but I was urged to ask this question when you guys appeared. I did ask a question around obviously the situation going on in Ukraine and whether or not through Waipuri, first point, we have any bonds or equity investments in directly or indirectly in Russian companies. And secondly, the only one I can think of, does City Forest export any of its logging capacity to Russia or Belarus?
On latter question, I would virtually 100% say no, we don't. But I'd have to be proven incorrect, but I've never seen it in any of the reportings. So I think we're safe to say no, we don't. And on the Waipori investments, again,
we have checked that. So management have followed up with Craig's around the Waipori investments. The initial response back was that no, it was clear of any investment in Russian securities. They're just doing some final follow-ups with his parent company and subsidiary situations, but so we're just waiting final response, but we don't believe so.
Cool, that's great, and yeah, probably saves us a lot of trouble trying to sell off shares in Russian companies. And my second, I have a point. I'll try and put it into a question. It's on page 20 around the environmental initiatives. Just are you aware that you've misspelled Orokonui and you've misnamed the Dunedin Wildlife Hospital? So just a correction there. It's a top of the second column. Thank you.
Thank you, Councillor Morgan. Mayor Hawkins.
Thank you, Mr. Chairman. Just following on from Councillor Barker's questions earlier around pay equity and the gender pay gap, Mind the Gap, which has been launched now as a voluntary register for. So the public service have to do this as of right, but there's a voluntary register being set up for private enterprise and some local government entities, among them Auckland Transport, Auckland Council, Auckland International Airport, Fulton Hogan, and others. Do we take it as given that DCHL will give consideration to the companies that we own being a part of that register, or would that consideration require direction from council?
We can certainly take it on board and investigate and start testing it with the companies.
Great, thank you.
Thank you, Mayor Hawkins. Councillor Hurley.
Thank you. Yes, I had follow-up questions from Councillor Barker's questions as well. Mr. Cooper, you mentioned that what you have to weigh up when you're looking at gender balance on the board is the best applicant for the job. That is very correct, and I 100% agree with that. However, the assumption perhaps from that is that the woman isn't always the best person for the job. But why do you think that is, that men are perhaps getting more of the roles?
Firstly, I talked about diversity, not specifically gender diversity. So we've got
yes, Councillor Barker's question was directly about women, and so is mine because it's International Women's Day today.
Okay, so my answer is about diversity in general, because that's how we look at when we are recruiting.
I'm asking about women.
We don't have
Councillor Hurley. That's inappropriate to ask a question and then carry on and interrupt when Mr. Cooper's trying to answer. So please just be respectful.
So we don't, to answer more specifically, we do not have a specific gender policy. We have a diversity policy to get the best people for the role, reflecting diversity as one of the criteria. To date, I think we've done pretty well in getting that diversity across the group. It's getting quite well balanced now. And we specifically, when we do recruit, I think previously it's the number of applicants, and to this day, we will still have a large proportion of, if you want to go back to gender specifically, we will have a large proportion of males apply for the roles than what we do females.
Okay, thank you. And diversity absolutely is very important. How many women do we have on our boards? Do we have, do all the boards for DCHL have at least one woman on them?
We could take you to page 92.
Mm-hmm.
And that report there shows that we have 0 women in Delta, but since this report year end June, we've since appointed a female to that board.
And that's the same in response for the Dunedin Airport as well.
Right, so now there's at least one woman on every board, is that correct?
Yes, and overall percentage wise, it must be around 35 to 35% at least female on the boards across the group.
Across the group, right. So how many boards then have just one woman?
D3. 3.
Right, out of 10. Okay, so you're saying that's 35% across the group.
By number, not by company.
Okay, lovely, thank you. And so when you mentioned before, when you answered the question that there is an intention to have better diversity and gender balance, what are the goals set for CHL boards to achieve that? Do we have any targets?
No specific targets, but again, it's very topical and we absolutely take it into account during the appointment process.
How are we going to achieve that if we don't have a goal?
The danger here is we have goals which are unachievable. We're charged with appointing the best governance possible, noting that we need diversity. So the foremost point of when we go through that process is achieving a balance between those two criteria.
Right, so you're saying it's unachievable.
No, I'm saying if we had a goal of say 50% and we get no applicants from the diversity we're looking for, that becomes unachievable at that point in time.
Is it possible for DCHL to look at being active on that, i.e. maybe appointing some women into mentoring roles so they get the skills to then move forward? Is that a possibility?
I think our intern program, from memory, has probably got a gender imbalance, and that we've got more females on that program than we do males. So I think that's a very good starting point, that we are pretty focused on widening the pool of talent across Dunedin.
Right. And so does that mean you'll look at those interns for DCHL boards?
No. In time, yes. But the intern program is very much about developing and identifying potential talent and equipping them better to go off and gain experience in other governance roles, so that in the years to come, we've seeded more talent within the Dunedin community, which hopefully will apply for those roles in the future.
Thank you.
Councillor Geary.
Oh, thank you, Mr. Chair, and tēnā kōrua, Mr. Cooper and Ms. Just following on from that question, because I have asked it before, and I perhaps have a different way of framing my question. I just first of all want to acknowledge the progress made in the last 6 years in terms of gender and diversity balance, both on the internship program and regarding the directors. But I just wondered, Mr. Cooper, if you have a view as to what the obstacles are around the pool of women in particular who are applying or available to apply with the skills. I absolutely take your point around needing particular skills, but the information I'd had previously, I'm just really interested in your comments, is around the fact that the pool doesn't have that, and I know that we're working on that in terms of internship. Would you have any other comments to make about that?
At the risk of sounding wrong here, the companies we've got tend to be historically dominated by males.
Understand.
You look at forestry, if you look at Delta, and if you look at Aurora, they've been largely male-dominated type sectors, and therefore the people that have got background relevant to those businesses probably somewhat limited. That said, on Aurora now, we've got 2 females on that board who have background of relevance to that sector. So equally, it's still challenged to find that get enough applicants. Because don't forget all this, there's a pressure point in my view coming, and we've seen it on some of the female directors have got, is that often they're actually full with enough work they can't take on anymore, because every company's sort of got a view around having gender diversity on their boards, and therefore there is a significant demand, and there's probably the talent pool's not sufficed to fill that demand at present.
That's a really helpful reflection, and thank you for that. My second question, it sounds like over time, time is going to make a difference to that. My second question was around how you would characterise Aurora currently, following the Commerce Commission's CPP decisions, and whether you would characterise there being a sort of a turnaround in the organisation, I guess, because it's got certainty now. And I give the example of the work done with the Otago Harbour Crossing as a great example of stakeholder engagement. Would you have any comments around the organisation in terms of where it's up to now?
Yes, so if we turn our minds back to 2016, we're now 21, we've had sort of 4 and 5 years under our belt. That a large proportion of that time was spent in upheaval in one shape or form. Firstly, splitting the companies in two, and then Aurora, both those companies building their own management teams and putting in place processes and structures to create safe businesses, to create safe networks and working environments for their staff. And in addition to that, Aurora had to deal with the Commerce Commission, and I think it was 7 reviews taken place over that period, and ultimately the punitive position that the Commerce Commission imposed on it, ending in March last year. So they've quite rapidly migrated from rebuilding a business, creating a new business model, and dealing with significant upheaval to one of a business as usual approach, and focusing on what they're there to do, and ensure they're doing it well for the benefit of its customers and its shareholders. So they have morphed, and I was speaking to the chair this morning, interesting enough, and he reflected that it's changed dramatically in the last 6 months from one of semi-crisis, if you like, doing a lot of work that was awfully time consuming and not about core business, to one where they now focus on their core business of delivering electricity to stakeholders in a safe manner, and keeping their people safe as well in doing that.
Oh, and thank you for that. And that leads on to my final question, which was around health and safety and wellbeing. And I see that featuring markedly in most of the reports. I think, though, possibly, correct me if I'm wrong, Delta hadn't started that work yet in terms of the wellbeing aspect. Do I have that correct? And if so, why have they not started that work yet? There seemed to be some quite advanced work in other companies, which was great to see.
I'm pretty sure in their interim report, and it'll come up later in the meeting, that one of their performance measures for the current financial year is around their staff wellbeing program, and they report progress against that.
Beg your pardon, it might have been one of the others perhaps in terms of a program, but it is really good to see. Any comments, further comments about those programs and the difference it's made to the cultures and the different CCOs?
I think the companies that have really strong, they all have something in place. It's the sort of programs are at varying levels of maturity. The companies that have really strong programs in place note really positive outcomes from those. There's an obvious correlation there, and it is on DCHL's work program for this calendar year to be coordinating more across the group and helping some of those companies with the more mature programs to perhaps share that experience with the more developing companies.
Oh, excellent. Thank you so much for your answers.
Thank you, Councillor Geary. Councillor Elder.
Thank you, Chair. I really enjoyed that summary at the start, and in the summary there's some really quite good news in here. And I was just wondering to comment your comment around how you see the health of our companies going forward, and in particular related to dividend to the council. So we look at Aurora, and the company recorded net profit after tax of 681,000, with the prediction being a loss of 4.2 million. So I just want some commentary as to what you see for Dunedin City going forward when it comes to returning to getting dividends from Aurora.
It's a mixed bag, and perhaps the SOIs will give us a better opportunity to point to those opportunities. But clearly, the airport, DVML and DSPL, whilst the latter two aren't profit-making entities per se, certainly with COVID, it's restricted patronage, and therefore they're worse off, and the airport will be worse off as well. So, and who knows how long that's going to continue having a negative impact. Delta should be relatively steady, given it's a service provider and has been a steady dividend source, which leaves us with the two main ones being Aurora and City Forests. City Forest is suffering due to log price downturn, which is always going to happen in a commodity market. It was on a boom for a number of years. There's been a downturn. There's been some improvement, and that they will still deliver a dividend stream, but probably not as strong as they have done. And on the flip side, Aurora has come out of a rebuild phase. It's still restoring its balance sheet, and I would say, again, we can get to that in the SOIs where we talk about dividend policies, but they do need to rebuild their balance sheet before they start returning dividends. So on balance, I believe we've turned a corner, but we do need to get stability coming out of the COVID side of things. We do need to see log prices hopefully at least stabilise, if not return. And Aurora, given it's a regulated market, we just need to get through this balance sheet rebuild and get on the other side of the curve, which I don't think is too far away. So all in all, I think the SOIs will indicate that we are looking quite positively towards, arguably in 3 years' time, to a restoration of more robust dividends. It should be noted that we're currently paying on the capital, which the DCC, the 112 million loan that DCC has with DCHL. The 5.9 million is calculated at just under 6%. So if you look, if we were paying market rates, that arguably would have been 2%, 2.5% rather. So the other half arguably was dividend, currently embedded as a higher interest rate as normal. So it hasn't been, there's been a reasonable return, but we fully accept that we're not here to deliver reasonable, we're here to deliver benefit to the ratepayers of the city.
My other question is actually just around, and there is little commentary in the summary, but just how those companies are managing the impact of COVID-19. We're talking about health and safety, and that's how their management practices are working through COVID-19 and the results of those.
We have a standard reporting template for them, and they've all got system and processes to look after their people and keep the business operational. So that where they are operational is fine. Where they're reliant on customers, i.e. DVML and the airport, they're looking after their people, but they can't do anything to influence their throughput of customers.
Thank you.
Councillor Mayor Hawkins.
Thank you, Mr. Chairman. And just picking up on some of the questions that have been asked around director appointments and the diversity of such, and that appointments are made on the basis of merit, or whether or not it's worth having targets, etc. And leaving aside the idea that gender is a social construct and isn't binary for the moment. The research tells us also that unconscious or implicit bias is rife, and the short version is effectively we appoint people to positions that look and sound like ourselves, and it's a structural issue in terms of getting a broader range of perspectives in governance positions. So just wondering what, if any, work DCHL has done in trying to articulate and mitigate those structural biases when it comes to appointments.
First of all, when we work with recruiters, the people, we share with them the policy and the requirements of our shareholder to have focus on diversity. And to be fair, the current service provider is very much that way inclined and supports the merit of it. Secondly, when our own recruitment panel or interview panel is diverse in itself, being a 50-50 split between gender. So it's very much topical. We haven't done any research, as you allude to, but we make sure we've done as much as we can to avoid any unconscious bias in terms of the selection process.
Apologies, I wasn't suggesting or recommending that you do research, just that we know what the research tells us. And so in short, the mitigation of that is something that you leave with the recruitment firm.
Recruitment firm and the panel appointment.
Right, all good, thank you.
Thank you, Councillor Lafiso.
Tēnā koe, Mr. Chair, tēnā kōrua. Ms. Adams Rawako, Mr. Cooper. My question relates again to page 92 of the supplementary agenda. I think it's page 18 of your annual reports, the diversity tables, etc. So thank you very much for the hard work. I was very intrigued to understand that 27% of your 796 employees earn over $100,000 annually. And my question is, do you actually track the gap between CEOs and the lowest paid employees in each organization?
No, we don't.
Okay.
That said, we have closed the gap by all companies now have a living wage policy in place.
So I don't know. This is probably, you probably can't say, but so generally, might the proportions between the lowest paid employees and the CEO be four times a quarter of the CEO's salary, or a fifth?
I'd only be guessing. We can do some work on that and report back in due course.
Thank you.
Thanks, Councillor Lafiso. Now, I'm just going to come back to you now, Councillor Vandervis, but Mayor Hawkins, your hand is still up. You're finished? Okay, so I'll come to Councillor Vandervis, then Councillor Elder.
Thank you very much. Dunedin Stadium Properties Limited had a loss of 7.5 million. A loss transferred to DCHL. How many years do you think that this will carry on where you're transferring losses across? If I go to page 160, for instance, of your report, there's a line there that says Intra group tax loss subvention of $4.5 million for this year and 4.6 million for last year. Does this tax loss subvention amount essentially to tax avoidance? And is it anticipated to continue at around $4.5 million?
It's certainly not tax avoidance. It just reflects the fact that all the companies are within a tax group, and we, instead of one company paying tax and the other company being a loss, the subvention payments is transferring the profit to that company, and therefore we don't have, because we're in one group, that's absolutely allowed for under the tax regime. the 4.5 million the current year, and it has been a higher level. This reflects the fact that City Forest has been the main source of funds in recent years. But previously, other companies had also contributed. So it is reliant on the overall performance of other companies in the group.
Right. Without this accounting subsidy, would Aurora have posted yet another loss of $4 million rather than having a slight profit this year?
No, there's no subsidy or involvement with Aurora in those figures.
Okay, so they're just a tax loss subvention.
Yes.
Okay, thank you. I've got a question for number 9 there. No, that's me for the moment. Thank you.
Thanks, Councillor Van Der Vest. Councillor Elder.
Thank you, Chair. And I just wanted to actually refer to the director mentorship and director appointments. And you talk about diversity, and I was just wondering where it is related to, and something Andrew Wiley actually suggested at one stage is Māori and Pacific Island people being brought onto those programs.
And that's really points to the fact that I use the term diversity, and as the board we use the term diversity as opposed to being gender specific. So it's all embracing. We are looking for a wide range of talent for the boards, which is reliant on the applicants we get.
And we specifically went to Māori and Pacific business organisations in the last recruitment round and made them aware of the recruitment and encouraged applications.
Oh, thank you for that.
Councillor Van Der Vest, have you any more questions or are you done?
Thank you.
Okay, that looks like it's bringing us to the end of question time. Have we got a mover? Would somebody be interested in moving this reports? Doug, we've got a seconder. Councillor Staines, sorry, I shouldn't say Doug, I should say Councillor Hall. Councillor Hall and Councillor Staines, moved and seconded. Would you like to speak to the reports, Councillor Hall?
No, it's good result. Thank you.
Any other speakers? Looks like it's coming to me again. Oh, sorry, Councillor Van Der Vest.
Yeah, I would just like to say, well, first of all, thank you for a very detailed report. 517 pages just in the supplementary agenda is quite a bit of information to get through. And I'm grateful that I've learned a few things about what's going on from wading through all this. I do wonder whether we needed 517 pages to actually get to the stuff that actually mattered here. But what I am a bit concerned about is that we have a qualified audit and that there seem to have been issues, and the error regarding the Aurora and Delta split issue is just one of a number of issues that we've had over the years where I don't feel that the audit has actually been that helpful. And I think a lot of people's understanding of an audit is that it would find, you know, if there were some really serious problems in the way the business of the council was conducted. And you only have to look at the city fleet frauds to realise that, well, they all went through audit and none of that was ever picked up. I wonder also about why it is that we keep dealing with the same audit organisation when we seem to have, on the one hand, a lot of very niggling issues that delay reports, and on the other hand, an inability to actually resolve issues, for instance, like the value of the stadium, which the auditors still seem unhappy about. The auditors also seem to be quite unhappy about the lack of evidence in terms of the value that we've put on the Dunedin Rail Limited assets. You know, there's a lot of stuff in here. There is the potential to finally get dividends, and I think it's been confirmed that we actually haven't had a dividend other than the interest payment since 2015. That's a very, very long time not to have had a dividend. Mr. Cooper has said that Aurora has come out of its rebuild phase. Well, it may have come out of its rebuild phase, but we're still not in a situation where we're getting anything like a decent return on investment from the companies. And this, despite the all-time record, albeit with revaluations, of City Forests having had a fantastic year. I'm concerned that the forward planning and budgeting for the next 10 years is something that we don't get to see. I'm concerned that the assumption that low interest rates are going to continue 22, 23, 24, and that it's going to be next month before that's looked at. I'm concerned that we are not going to be able to produce the kind of dividends that are planned, even meagre though they are. So I appreciate that there's an awful lot of work being done around equity in terms of gender balance, that we are now doing carbon reporting, and I'm pleased to hear that it's not as expensive as I'd feared to do it, especially considering that I doubt there's going to be any positive effect available from it. I'm just hoping that the plan to produce a $10 million dividend in 23 doesn't seem to me to be supported by any of the information that we've got sitting in front of us now. We've got City Forests able to produce profits, but if you look at the forward assumptions, those profits are going to be half of what they were this year. And how City Forests can basically front that kind of dividend from cash flow, pay $4.9 million of capex, and then pay a $13.6 million dividend as well. I simply can't see it happening from all of these figures here. So I hope that we do get the 10 million in 23, and that it will be paid from cash flow and won't have to be borrowed as it was in years prior to 2015.
Councillor Vandervis, I just think you've had your 5 minutes. So
thank you very much for indulging me. I appreciate it. Thank you.
Thank you. Councillor Barker.
Thank you, Chair. I note that we've got 7 out of 9 of the annual reports today, and I'd like to congratulate them on achieving 87% of their KPIs, which they've met or exceeded, and that's a fantastic performance. I think we sort of go through and we nitpick through all of those hundreds of pages that we've got today, but I'd really like to give my thanks and congratulations to the directors, the management and the teams of all of our companies for the hard work that they do. It's challenging working for the public and during a COVID pandemic, and I'm hoping they'll all hold in their heads and their hearts that they're working for a better Dunedin. And of particular interest to our community who own the companies is 2021 in numbers, and I referred to one of those pages when I asked a couple of questions. We have $1.4 billion in assets working for us, $84.7 million capital expenditure invested in 2021, $296.2 million operating revenue, which is circulating in our community. The DCC received $5.7 million in interest. There are 93,000 customer connections at Aurora Energy and over 900,000 trees planted. We've also building our workforce. We've got 29 trainees and apprentices at Delta and over 750,000 passengers at Dunedin Airport, connecting our community and acting as a gateway for our visitors. The overall forecast was for a net loss of 8.6 million, but the group net profit came out at 26.1 million. So those are some pretty good numbers there, but there's also some great stories for our community's welfare. We had the Aurora capex increased and achieved a net profit instead of that forecast loss. City Forests had their record financial year, Delta was well above budget and achieved some great contract wins. And then Dunedin Airport numbers were 25% up and their pre-tax operating surplus was up on the previous year. Dunedin venues and Dunedin Railways, my heart goes out to them, hugely impacted by COVID and border closures, but we can see that they keep focusing on the future. There's also within the reports information on the community involvement and sponsorship. We see valuable support for our communities, including the Aurora Energy Otago Science and Technology Fair for school pupils. City Forest also provides small walking and biking tracks and firewood donations. Delta's Charity Challenge, where staff raise funds and nominate a charity of their choice. And I really like that it's linked to a health and safety initiative. So if they say that there's something that needs raising in health and safety, they kind of score points, get some money towards a charity, which is really fantastic. The DVML internships and community access grant management plus the airport's pull the plane show working with our community raising the access and price. We've also mentioned some great environmental initiatives, Aurora decarbonisation leadership, City Forest support for rare and endangered species, DVML's waste management commitment, and Dunedin Airport focus on public recycling. Especially exciting for us to see the greenhouse gas emission summary and the focus on developing emission and waste reduction strategies. Pleased to see on International Women's Day that the take last year was 4 men and 2 women, and this year is 1 man and 4 women. So the gender biases, we're helping break the biases. Our new intern directors have great credentials, and it's up to us, I believe, as a council to help give them that hand up. I asked a question earlier about reporting on diversity, with just 23% of the DCHL team being women, and I look forward to further efforts on DCHL's part to work on a better diversity balance. I remember that previously the DCH boards, I think it was 2019 or 2020, we were around 14%. I think it was at the governance level, and now it's around 35%, with Dunedin City Councillors themselves at 33%. So we are making strides there. The annual report links back to our next report on the statements of intent, and we usually get what we ask and agree to. With the current 87% of the targets achieved, we do need to think hard about what we want our $1.4 billion of assets to be doing for us. So today it's useful to have both the annual reports and the SOIs together and consider how we might aspire to use our companies more wisely. Thank you.
Thank you, Councillor Barker. Councillor Walker.
Yeah, thank you, Mr. Chair. I'll try and be brief here, but did want to say at the outset, thanks to Miss Adams and Mr. Cooper and the companies for their work on this 517 pages. And I do agree with Councillor Vandervis on my reading of them. I did learn quite a lot that I didn't know actually. So it was actually a really interesting read. That might sound daft to many, but I quite enjoyed reading it. It is a good result, although I did mention earlier that this news, the good result, I think, comes in really uncertain geopolitical times. I think just today we've had Mr. Putin threatening to turn off oil supplies and gas, and there's talk of perhaps a barrel of oil going up to $300, which is terrifying. Extrapolating from that, I think the calculation is around 1 cent per dollar. We'd be talking over $5 a litre of petrol. So go figure. Yeah, I'm really positive about this, and I think this result in the context of the time is good. I think the work at Aurora is exceptional, actually, and how many people may have griped about it in the past. We've gotten off the floor and we've reinvigorated that organisation, and I think we can only look positively into the future around what might happen with Aurora. City Forests continues to be a great success. Delta is another great story. I mean, we've talked about lack of morale in that company and poor directorship, and I think that ship has been turned around. If you look at some of the longer term contracts there, I mean, it all bodes pretty well. So that's exciting, and I think the community involvement and environmental initiative stuff is all very good, but I don't think I think we could probably do more there. It's positive, but I don't think we should rest on our laurels there. I think there's a lot more we can do in that space. And finally, I'm just really chuffed to see the greenhouse gas emissions work. I think it's long overdue, but it's much needed. And I disagree with Councillor Vandervis actually on this one, that there's not much we can do. I don't think we have a choice. We should, data is gold. We should take that data and we should use it to push forward as I say, we don't have a choice. It's in the best interest of our community and the future of us all that we encourage and impel our council control companies to work on reducing their emissions. Thank you.
Thank you, Councillor Geary.
Oh, thank you, Mr. Chair. And I want to start by just acknowledging what an extremely challenging audit this has been, with the issues with resourcing from Audit New Zealand and the delays. So that's just an acknowledgement of the challenges. These were particularly quality reports in my view, and that's been covered by other speakers. And I too found the detail, particularly around such things as sponsorship and the involvement or supporting of organisations within the community, the carbon footprint reporting, and the health and safety and wellbeing initiatives that have been put in place throughout the companies, all in the right direction and very positive. It's a particularly good result, and you know, we didn't expect as good a result as this, but particularly good, as Councillor Walker said, in terms of in the context of a global pandemic, and not even including the political issues globally and the challenges on the precipice there. But at the heart of all of these reports is the people, and I just want to acknowledge the staff, as referred to in the reports, our people, the staff of the council-controlled organisations who are valued for the work they do and the efforts they've put in to achieve these results. And also our community, the community that interacts with these companies in a variety of ways. And I was particularly impressed with the work done by Aurora around the Otago Harbour crossing, and it was covered in detail in the report. The engagement over a very long period with the community, and then right through to the completion of this project, and compliment Aurora on that. And then moving to the questions that were asked by a number of colleagues, and I thank them for those questions and for the responses from Mr. Cooper and Ms. Adams that were related to diversity, and particularly because it is International Women's Day with a theme of Break the Bias. And I want to acknowledge the work done in the past 6 years around this, where there are a great deal more women, and I haven't done the figures on it, but I know there are a great deal more women sitting on the board as directors. There's more women in the internship program, but we need to do better, and there are reasons why we haven't got those figures up more than that. There are challenges that are beyond us, but we can be proactive, and I hear that we are being. And thank you to Ms. Adams and to Mr. Cooper around reaching out to various groups. And I know that that will continue because we want to lead the way as an organisation and a group of organisations in this regard. So congratulations, a very good result, and excellent to hear the stories of our people behind these reports. Thank you.
Thank you, Councillor Raddick.
Thank you, Chair. I'd like to acknowledge Mr. Cooper and Ms. Adams as for the marvellous job they've done as interface between us, ourselves, and the companies, and as representatives of the directorship and management of the various companies, because looking at these annual reports and taken in conjunction with the half-yearly reports we're about to look at, seems to me that the companies are tracking well and going and steadily improving. And I think, you know, slow and steady wins the race. And I think they are doing a very good job, both in interfacing with us, which I don't characterise as being particularly easy, because we have all manner of different ideas and agendas and thoughts about how the company should run, and whereas most of the people running the companies are focused on the commercial activity. However, I think that's a very good job they're doing, and thank you very much for that.
Thank you, Councillor Raddick. Councillor Houlihan.
That's the problem with coming quite far down the track, is that I'm being very repetitive here, so sorry about that. But I wanted to repeat what some of the others have said, is that, and I'll keep it brief because there's no point going over the same things, but thanks so much to Mrs. Adams. She's always meticulous and has great detail on everything. So thank you so much for that. And Mr. Cooper. I just, you know, two things have been highlighted here that are really significant. We predicted that there'd probably be a loss because of COVID, and we are in extraordinary times. I mean, I've never known the likes. Yet these companies have all done exceedingly well, you know, in really, really challenging times. So it's brilliant results. These reports, if anyone is sitting at home and wondering, I mean, you know, we've got massive pages of reports here for this that I was blown away at how much there is, but the detail is very good, and we'll be able to refer back to that later too. And thank you for this breakdown on page 92, because it is really good to see what it's been divided up into, you know, the male and female directors, the senior management and staff. And it's really interesting to see that as the breakdown. And I know, yeah, so some of the answers that came back to some of the questions around that with women on boards and diversity, it's a long-standing thing. We're not the only ones to say it. And yes, it's International Women's Day, and I'm a woman, obviously, so it's an advantage to that. But it does need to change, because next year we'll say the same thing if things don't change. But I do appreciate that our percentage has increased, and that's great. However, if we don't set goals for it, it's not going to change. And something that Mr. Cooper said around the thing that you hear often on governance positions and on boards is that we want the best person for the job. Now, I 100% agree with that. I've never pushed for gender over the best person for the job, but a woman is always going to be considered perhaps the lesser for the job if they don't get chosen onto boards, because if men are always on the boards, they're always going to have more experience. So it's a vicious catch-22, but somehow we need to be ambitious and set those goals and say, right, we've got to change that. And we've got to be, you know, proactive on that. I know some organisations, for example, Naitahu, last year or the year before went out, they have a Manawa Nui program, which is for their governance to sit on their boards, but it's like as an intern, and it's a paid intern role. Now, they only looked for women 2 years ago because they saw a gap. Now, I think that's really absolutely innovative and brilliant to do that.
Councillor Houlihan, please.
Yes, sorry, I diverted, but I used that example because we've talked about it a lot in this meeting. And I think that's a good example that we could look at following for 1 year, you know, and yes, some people might say, oh, that's leaving others out, but women have for years and years and years been, you know, haven't been shown on boards or in senior management roles. And it is starting to change, but it is too slow. So let's be more proactive on that. If we don't set goals, we're not going to have it. The other thing that is excellent about this report is everybody else has said it, but having our carbon footprints reporting here for the first time is excellent, because once you've got it there, you've stated it as a goal and you can see the progress. So next year we can say, oh, well, this year you were that. And then you can see if the steps they're taking are actually, you know, making a difference. So that's great. It now starts. Let's do it.
Councillor Elder.
I can remember just being a newbie in council in 2016 when the Aurora underinvestment in polls news story broke. And I look at what Aurora and Delta have gone through over the past few years to get to the position where they are now. And I can't commend them enough for working through the issues that needed to be worked through to come to a place where they are in a sound position to go forward. I really want to commend the directors for the work they've done over this period of time, and also the CEOs. And I believe the CEOs and the staff, and the looking at both Aurora and Delta, you can see a huge culture change. And we talked about health and safety, but it's a massive turnaround in the sense of wanting to reinvest in their companies and create a sustainable long-term future for their companies in the space of maintenance and supply of electricity. So I believe this report actually demonstrates a huge turnaround for those two companies, and I really, really want to congratulate them on that. I would also encourage both women and Māori and Pacifica and diverse groups to get on the director mentorship program, because I believe that's the way we're going to train people up and get them ready to be directors. It's a complex job, and being mentored and getting in there will teach them the ropes. And so I think that going forward, we're looking at diversity, and to create that, we have to train it, we have to mentor it, and we have to get people on board. And I see that now we've got women on all the boards, and those numbers are going up, but I would like to also see more diversity in other areas. But given that it's COVID-19 and Dunedin Venues Management Limited and the airport have been severely affected by the lack of numbers, I think, in fact, we have had a really good outcome. So congratulations to all those involved. Yes, we can do better, but I think we are. We are trying to achieve the goals that we've set out for our companies.
Any other speakers? I'd just like to make some comments. Mr. Cooper and Ms. Adams, yes, I did appreciate the report, and there was a lot of content in it, but also think when we look at the shareholder advance of 112 million and we think about the 5.9 million paid, you rightly said that's 6%. But if we look at the total values of the companies at over $1 billion, that puts us back at perhaps closer to 0.6%. And I think it is well recognised that we do need to get to a point where we get, and councillors are going through this process at the moment of looking at our companies and doing an overall assessment of what our companies, why we own them, and what we're going to do about them, and all our commercial property as well. But I think it is time coming up when we need to see better returns from our companies. And but I recognise, actually, Councillor Elder probably put it as well as anyone, that the work that's happened in the last 6 years, since 2016 till this year, we've got vastly different companies. We've pulled apart Aurora and Delta, made two separate companies, two separate boards. There was new staff right throughout the organisation. The same with DCHL. We've got new staff, we've got new chair, and I absolutely think we are heading in the right direction. So I'll hand over to Councillor Hall for your right to reply, if any.
No, I got no comment at all. Sounds pretty good. We're heading on the right track. We're starting to get a dividend. We just need to try and get a bigger one for next year. So.
Okay, well, with that, I'm going to put the motion. All those in favour, please say aye. Against? I'll call that carried. Thank you. We now go to item 9, draft statements of intents.
Okay, just a few introductory remarks. From our perspective, we have addressed all the points raised in the letters of intent, ones that are relevant to the SOIs, particularly focused on the 2030 net zero carbon target. We've embraced that. Along with, we've brought some clarity to the dividend policies, which we've summed up on page 46 of the papers. We also touch on the capital restructure at City Forests. principally, this reflects the fact that the company's had earnings, it's had solid retained earnings. It's ended up with an equity ratio of around 75%, and we just want to realign that. Effectively, that's money that's been retained over the years and can now be released back to DCHL, which will cover dividend to DCC, and of course reducing our own core debt from many years ago, and to cover the Dunedin Railway hibernation costs for the next 2 years. So with those opening remarks, I'll hand back to you, Councillor Ward.
Yeah, thanks very much there, Mr. Cooper. One of the questions, I just want to start off with a question. I just noticed when we turn to page 46 of our agenda, which I'm not sure what, just in the opening pages of your report, when we're talking about dividend, I noticed that the companies have got different metrics for achieving dividend or paying out dividend. I realise they're different types of companies, but should they be a more standardised format, do you think?
I don't think standard will work, given they are different companies, given that they're in different states. Yeah, there is some, we have looked at this closely, to be fair, but one size doesn't fit all, and yeah, they are relatively tailored to their own environment, and to reflect this from one year to the other, there can be levels of uncertainty, so we don't want to see them undercapitalised in any one year as well. So to be blunt, the answer is one size doesn't fit all.
Okay, so if we go to individual companies, then we look at City Forests, where they've got they have been paying dividends, and I recognise that, but there has been some talk at different points of a lazy balance sheet. And what I mean by that, for those that don't know, is just a very low debt to equity situation. And I'm just wondering if we would have a view that maybe, I noticed this year, for example, they've completed the McCrosty purchase, and that was 500 hectares of land, and they did that pretty much out of cash flow. Should we look at purchases perhaps going to debt and being intergenerational, and the dividends coming more out of the profits that could then go back to the community? Would that be a better way of funding that, do you think?
Well, if you go to page 47 of your papers, point 14, where we talk, well, point 13 it starts, we go to that very point. So our thinking is that they are at 75% equity ratio, which means they have pretty low debt. So we are looking at, rather than formulaically change it, because they are working in a volatile environment, and if you recall that some years ago, when interest rates were high, to be fair, their interest bill was a bit of a burden to them, which meant they had very low dividends when they had poor earnings because commodity prices were low. So we're very conscious that we don't want to hoist something on them that makes them underperforming, particularly as interest rates are rising. So we've opted to do a one-off capital restructure at present, and it could be, and that will generate some additional dividend stream, which we said, and will lower their equity ratio, which means they will carry a bit more debt. In terms of how they're funding purchases, we've also put in place a policy with them. They have some free carbon credits. They've got a pile of carbon credits. Bearing in mind they're in the ETS scheme, so they are valued within that model. So they've also got to repay credits in the years to come on some of their forestry stake as they harvest them. So to put them to one side, and at present, their carbon credit value is circa $80-odd million. So we'll put in place a policy for how those carbon credits are released back into their balance sheet, given the carbon credits are going up in value. So we're trying to, we could sell them all today and take the money, but equally that may mean we miss out on the future upside on carbon credits as well. So the plan is that they sell around 10% of them per year, and that 10% would fund future forestry acquisitions, and would keep their balance sheet at a slightly better geared rate So drop it from around that 75% down to a lower level, whether that be 60, 65%. And to achieve that, special dividends would be paid as and when appropriate. So the first year we're proposing to do this, there'll be a special dividend paid in the coming in the 23 FY23.
Thank you. The other question I just want to have about the Aurora, and I see that you've got the consider dividends once, and I assume it's funds from operations versus the debt reaches 7 to 9% range. Could you perhaps tease that out a wee bit? I don't quite understand what that means.
So we've had some valuation work done on the companies, and as part of that valuation work, we discussed with the external advisors, in their opinion, when it would be appropriate to see dividends come from Aurora again in the future. The companies, so we've sought that advice and we compared that with the company's position. They got to a low equity position of around 23%. They're currently sitting closer to 30, or just under 30%, I think it is. From their director's perspective, they're sitting there saying that's a very low equity ratio for a business of that size, and particularly at its debt level. So they're sitting there saying we need to improve our balance sheet and get a better equity position. We're sitting here saying, as the shareholder, yeah, we get that. We've also advanced you a lot of money, which you're paying interest on. And we would like to see some recognition and reward for that support we've given you. And in reality, there's risk in everything, even though they are a regulated company. But we would like to see some return to give to our ultimate shareholder, the DCC. So they're the two sides of the fence. So the advice we got was to look at it from a slightly different perspective instead of just straight profit, because the company is investing more than its operating cash flows for the next few years. So normally you could take the position that their overall cash flows are negative only by a few million. But lots of companies would have that problem when they're investing heavily. So we've opted to look at their free cash flow from their operations effectively. So, and they're generating very strong cash flows from their day-to-day operations. So hence we've come up with this formula of looking at their funds from operations over their debt and aligning that with a Standard & Poor's type rating of what their peers in the industry may be rated at. And that's a BBB rating. So we sort of brought that in and looked at it from a perspective. If we want to see the company maintain a rating equivalent to its peers, and we're lending them the money, so the BBB rating would be maintained if they paid a dividend in that 7 to 9% FFO over debt in the coming years. So it's a way which the company's happy to live with, on the basis that the shareholder is recognising that they won't rebuild their balance sheet as fast as the directors believe is prudent, but it's based on a formula of maintaining what would normally be an external rating with the financial markets.
Thank you. I don't see any hands raised. I find it very hard to believe there's no questions. Councillor Raddick.
Yes, a couple of quite small questions, really. I was concerned about the difference between the total income less the payout, but it seems you have. Thank you, Mr. Cooper, answered that question because of the cash. I hadn't read that carefully enough. The cash, the amount of cash you're taking out of city forests and going to cover the shortfall in the returns to us, to the council. I'm wondering about their return to the council is put through as a payment of interest on the money that council has advanced to the companies. If that money had been advanced from private sources, I guess the interest rate would be less, but most companies are looking to return a profit with calling the payment of interest on that cash, well, on that advance or on that loan, if you like, as an operating expense. So how do you think that leaves the companies really in terms of the net profit they are making? If we take that amount of interest paid on the debt back to the council out of the picture? Because it does seem that it's a relative, in that sense, it looks a relatively light return on investment.
So you're talking about the 5.9 million we pay on interest on the 112 million shareholders advance.
Yes.
The question on it is what, sorry?
Well, that is effectively our net dividend back from the companies. That's going to be our net dividend back from the companies. So in fact, most private companies would be looking to make a dividend after any interest payment for money they had borrowed.
Yeah, it makes no difference because we're all one tax group. There's no implication whether it's paid as tax or as interest. This dates back to 2012 when the previous regimes put in place a finance rate on the 112 million to 5.7%. So it's something that sat there, whether we call it a dividend, whether we call it interest, essentially it's a payment back to council on that loan. So it makes no difference. Well, I'm not so sure I understand your point, whether it goes to the companies or not. The loan is actually to DCHL as a loan to us, so we had capital to own the companies.
Yeah. Now, I suppose my question is a qualitative one or a subjective one. How does that leave the position, in your opinion, how does that leave the position or the return on investment of the companies once you take that interest payment out? Because a typical private company, they'd be making payment on loans, so the interest payments would go out, and then they'd be looking to have a net profit over and above that, whereas we get it all back as interest.
No, because that interest comes from DCHL only, so we get dividends from the operating entities. We pay our costs. We obviously have a residual loan of circa 20 million from some years ago. We have to fund that, and then we pay the interest on the 112 million advance from DCC. And any residual pays down the 20 million loan, which is slowly shrinking.
Right.
Oh, and we pay Dunedin Rail now as well.
Right, so that's a sort of a DCHL thing, what you do with the money.
Yeah, it's very much between DCHL and DCC. None of that is relevant to the companies.
Righto, thank you. And just one other thing on the statements of intent. Delta being its own, being an operative company, they're adopting a 2030 carbon zero goal. But when I look over further to their statement of intent, page 84, the only way to achieve that for Delta is regarding non-controllable emissions and the potential cost of offsetting residual transmissions. So are you saying that Delta will try and achieve carbon zero with carbon offsets, purchasing offsets?
That wording is consistent across all DCHL group companies. So all the statements of intent incorporate that wording, which is really around adopting a 2030 target and acknowledging that there's still a bit of work to do in road mapping that. That's the work that's underway at the moment to develop strategies and targets. There is a bit of work to say what lies between here and 2030, what are the areas that are controllable, and then we would be looking to come back to Dunedin City Council as per your letter of expectation and provide advice on any areas that weren't reducible and potentially what the cost of offsetting those might be. But that would be a topic that we would come back and talk to DCC about. There's not been a decision made around deciding to offset already.
Yeah, well, it's still a year off. Thank you.
Councillor Barker.
Thank you, Chair. I just have a few questions. My first one is, I noticed in the annual reports that there was different sponsorships and donations set up, and some of the sponsorships were to out of town events, and I know how much some of our local events are challenged. So I wonder, is there a policy for sponsorships and donations right across DCHL, or does every individual company have their own policy on who they sponsor?
Waiting for us, councillor, to do it. It's on the forward work program, but for a range of reasons, it's not a piece of work that we've progressed as a priority at this point.
Okay, that's great, thank you. The next question is just kind of want to understand around the process, is that, for my own interest, I guess, is that Dunedin Airport is 50-50 owned by the government and by the DCC. So do you have another process where you go to the government, or Dunedin Airport goes to the government around some of the KPIs that are being set?
Yes, within their statement of intent process, they have to report to the minister as well. So we work in parallel. Generally speaking, we're on the same page, but there's been a couple of things over the years that the government, the Treasury wouldn't go with, which we wanted, but there hasn't been anything of substantial issue.
Okay, thank you. And the other one I just want to know is about the lost time performance measures. And there's DVML have got 6 lost time accidents per 200,000 hours worked, Delta have 3.5, and City Forest 3. And is this based around industry standards?
Whether it's on industry benchmarks and things, I couldn't say, but certainly each company sets their own target based on the industry that they work in.
Yeah,
in terms
thank
of
you.
external benchmarking, I think there would be a range there.
Yeah, because I found it curious that DVML would possibly be more accident prone than City Forest. So I just wondered about that one. Thank you.
Councillor Geary.
Oh, thank you, Mr. Chair. This was around item 21 on page 48, or page 4 of your report, DCHL report, Mr. Cooper, and it's about the living wage. And I just wanted clarification. I'd noticed in the detail of one of the companies that they paid the living wage, but not if people were in training. I'm assuming that the comment on page 48 around living wage, the performance measure, all direct employees of DCHL group companies are paid at or above the living wage refers to that. Is that correct? And why are the apprentices not paid the living wage, or those in training?
The training one, I believe that was in City Forest's account, which I think would refer to perhaps apprentices at their contracting partners. So we can seek to undertake to find out some more information about that and come back to you. Yes. There wouldn't be any direct employees at City Forest that are in that position anyway.
Okay. Thank you very much. I'd be interested. Yes, thank you.
No other questions anywhere? I just I would remind councillors that we, if we have any things that we'd like to add to these statement of intents, we're free to submit them to Mr. Logie, and we, if necessary, can also have a workshop on this. Oh, I see another hand gone up. Councillor Barker.
Sorry, I missed that question, which was, have we got a date for the workshop? Because I see the questions are supposed to come in by the 31st of March, and I don't see a workshop on our calendars.
No, we don't have a date just yet.
The workshop schedule of all of the workshops will be finalised this week, so we'll just need to line up priority first, so rather than put them in. So they should start populating toward the end of the week.
Thank you.
Okay, would someone like to move the reports? Oh. Councillor Barker, thank you, and Councillor Hall is seconding. Would you like to speak to them, Councillor Barker?
Thank you, Chair. I have been challenged in the past about some of these statement of intents, and I'm really happy this time to actually see there was the table on one of the pages which gave us an outline of the changes, and I found that really useful because last year I had to search through all of the statements of intents from the previous year to that year to find all of the changes, and I really appreciate the work that's been done on that. Some of the things I brought up was just around the what was that, the sponsorship and grants, because I noticed a few were getting, I guess, double dipping across, and we were also sponsoring some out of Dunedin events, and I know how hard it is for events to get some of that funding. I was pretty happy actually, which might be unusual, but congratulations to DCHL on putting forward these statements of intent, which I hope will help us focus more on what we want our $1.4 billion worth of assets to achieve in the next year.
Thank you. Any other speakers? Okay, there's no other speakers. Won't give you a right to reply on that basis. I'll put the motion. All those in favour, raise their hand. Those against? That's carried. Thank you. Look, I'm just looking at the time, 3:15. I wonder if we have a 10-minute break and come back at 10:25. I'm happy to move that. Have I got a seconder? Thank you, Councillor Wiley. All those in favour, raise your hand. That's carried. Okay, we'll come back in 10 minutes. Okay, well, thank you for allowing us to have a short break. Item 10, Mr. Logie, is the City Holdings parent financials for the year ended 30th of June 21. Would you like to speak to that or open with any statements?
So this is just a follow on. Obviously, the annual reports for the group were the consolidated numbers. So this is just showing the council the parent numbers for DCHL on its own. So happy to take any questions on the report as presented.
Any questions? I'll just make a question there, Gavin or Mr. Logie. On the statement of financial position, I see there's been a reduction of $2.5 million in debt. Was it 2.755? That's a historic long-term debt that was related to previous councils borrowing. We've been told in the past it was previous councils borrowing, DCHL borrowing to pay for the stadium. I see that's come down. Was that predicted, or I see the budgeted figure that they expected to be was 25.5 million.
So that'll be a reflection of the fact, to go back to the income statement, or the cash flow refers to the fact that additional dividend came through from City Forest of $4 million.
And debt was paid down.
That's allowed some of the debt to be paid down.
Yeah. Any other questions? I'm willing to move the report. Got a seconder? Thanks, Councillor Wiley. Any discussion? I'm happy to just say I think it's good to see this. It's good to see that debt is going down. It's positive that we're trending in the right direction with that debt that was incurred over a period of time some years back. Any other speakers? Okay, I won't exercise the right to reply. All those in favour, raise your hand. Anyone against? Okay, that's carried. Item 11, the 6 monthly accounts for the Dunedin City Holdings Limited Group companies. So we welcome back Mr. Cooper and Ms. Adams. And we're item 11.
Okay, so these are the 6 months to December, unaudited, of course, and they do cover the period of the start of the second round of COVID and the interruptions and upheaval that's caused. So there are some distortions in there when compared to the previous year's numbers. The 6 months is an interesting concept because it covers seasons. It's also covering this year in volatility. Some of the better details is in the 3 monthly reports, which we get to next, but happy to take any questions on the interim 6 month reports.
Questions, councillors? While I think of them, before I see some hands go up, Keith, I was just wondering, there's no mention, and historically there's been, in times are tough on the airport front, there's no comment of thank goodness for the high dairy prices. But this year we have had pretty high dairy prices all the way through. That doesn't seem to be featuring overly highly.
No, fair comment. They've actually gone silent on it, so one would wonder whether it's actually hit them yet. We'll certainly make inquiries on that front.
Thank you. Yep. Councillor Geary.
Thanks, Mr. Chair. And look, just a very minor point, but I want to check that it wasn't a typo on page 177 under customers. It's talking about the in-depth interviews. Was it just 10 or should that have been 100? It's just the way it was articulated around the 700 participants. It just sounded like that may have been a typo, but I may be wrong.
We can go and inquire, but I think if those are some really in-depth interviews, it may have been that they were focusing on qualitative information there, so it may well be 10, but we can make
So as a kind of a pilot and then going into the 700, is that the general direction of travel?
I would think so, but I'd need to check with Aurora.
Okay.
Councillor Reddick. You might need to unmute yourself.
Yes. I'm just slightly confused about the difference between the various amounts of quantums of profit and the dividends from the various companies in the opening statement, page 172, 173. So looking at the amounts on the previous page for the net profit, it seemed to come up to 5.1. And then we've got 5.9. So I haven't formulated a really specific question, but it seemed like when I did some sums on it before, it seemed to me we're 800K short on the payment from the companies to DCHL, and I was just wondering if that comes from the previous mention of the cash withdrawal from City Forests.
5.1, that's the income for the 6 months,
Yeah.
whereas the 5.9 dividend is the annual payment to council.
Yes.
So we've got it. So one's an annual and one's a 6 monthly income. So
there we go. So the 5.9 is an annual payment.
Yes, so it's saying that in the 6 months we've received 5.1 million in dividends so far, and then at full year, which will have another 6 months worth of dividend payments, that total dividend income will be applied to paying the 5.9 million to council and funding to Dunedin Railways.
Yes, sorry, the 5.9 payment on interest is for the full year.
Yes.
Right. So if there's another dividend of 5.1, we'll have, 4 million extra.
There won't be because we're going to pay for rail.
Yes. Okay. That makes sense. Thank you.
Also, just Mr. Cooper, very pleasing to see in point 11 that the balance of the money that was owed on the Noble subdivision, we entered into a deal some years ago where there was to be structured payments bearing interest from the day of commencement, and that was due to be finished paid out by 2024, but that's actually come, well, it was paid in December, so we've actually been paid almost 3 years early, so that's very pleasing to see. Was there any more to come? Is there any good news potentially or upside from that yet?
The model says at the wash up, as and when that occurs, and it was forecast to be, as you rightly said, 2025, either that date or when it's all finalised, the model gives us another share in any excess over and above all the costs. So the answer is going to be yes, but we don't know what the answer is yet.
Would you have any idea? Are we talking hundreds of thousands, or will there actually be millions still to come, do you think?
I wouldn't like to second guess it at this stage.
Okay.
But we've been focused on acknowledging we've recovered all the money owed. And anything extra will be good.
Thank you. Councillor Raddick, your hand's still up. Have you got another question? You might need to unmute yourself if you're going to ask another one.
Yes, coming out. Another question, yes, indeed. Page 238 or 330. The cash flow hedge reserve. So does is this actually retained earnings as a cash flow hedge that's held there by TCHL?
On page 238?
Yeah, page 238, retained earnings and reserves. So the cash flow, the middle paragraph under retained earnings and reserves, it says the cash flow hedge reserve has increased by 16 million, reflecting a change in the market value of interest in foreign exchange hedge valuations. So is there a cash flow reserve held by the company?
There is a reserve, but this really reflects the change in the mark-to-market of our hedge positions between the reporting periods. So it's not cash, it's just the reserve which is derived from the change in the mark-to-market value between periods.
That's quite a lot.
I think you'll find in the previous period it was 42 odd million or something like that.
All right. Okay, so the next paragraph is the carbon credit reserve has increased in value by 18 million, being the revaluation of carbon credits held. So these are just, carbon credits held by the company. They're still they're a notional thing, so their valuation could change in either direction depending on the market. Yeah,
correct. And they've increased subsequently.
As we mentioned in the cover report, they have had a really marked increase over the 6-month period, more so than the previous year.
And well, all reports are expected to increase further. Thank you.
Councillor Hall.
Mr. Chair, you're referring to the dairy income from the airport. On page 285, we had a 27.5 increase in our airport-owned dairy farm milk sales, an increase of $88,828 for the year.
There'll be a lot more by the full year. Thank you for picking that up. Any other questions? Going to get off light, Mr. Cooper, Miss Adams. Would someone like to move the reports? Thank you, Councillor Hall. Got a second to Councillor Wiley. Would you like to speak to it, Councillor Hall?
No, thank you.
Any other speakers? I'll just say, look, these are positive, and I think in particular one of the things that stands out is that the pre-profit, before tax, the net profit for Aurora is 6.9 million, where they were only budgeting 2.5 million. So I think much as we have concerns in the statements of intents, and we look at those previous figures of no plans for dividends for another 3 to 4 years, it is actually quite positive to see that the company is actually tracking very well. And these things are subject to change, as Ms. Adams said. These figures will all come in again revalued in May or whatever before we settle them. So yeah, quite exciting to see that positive trend. So any other speakers? I'll put the motion. All in favour, raise their hand. Anyone against? No, I'll take that. Now I haven't in my agenda that I've got here got an item 12, but are there any notifications for chair issues?
Yep. Mike, that of Councillor Lord, there is the item 12 is on the back of item 8.
Page 506.
Yep.
Looking. Oh, the quarterly update, is it?
Yep.
Okay, sorry, I haven't even seen that, and I haven't seen it on my chair's report. So turn over. No, I haven't received that either, but that's okay. So this was Mr. Coop. No,
it's Gavin and me, in fact. So, Councillor Lord and councillors, this is the first of the reports that you requested as part of the statement of intent. Letter of expectation, where you asked the companies to do public quarterly reporting to this committee. It just so happens that it's coincided with all of the other reports. And so everything that is in this quarterly report has been covered in nearly everything else that you have discussed today. But this is in a slightly different format that is quite easy to digest and consolidated. And so we're interested in any feedback you have on the format of this information in particular. And Mr. Cooper and Ms. Adams are here to answer any questions you have of substance that we haven't already covered.
Any questions? Can't see any thumbs up, any hands? Oh, Councillor Vandervis, thank you.
Just wondering on page 514, we've got earnings before insurance tax depreciation and amortization. Is there a reason that that graph is appearing to be cumulative? Is that usually the way it's done?
Because yeah, it is cumulative, correct.
Why is it cumulative? Would it not be more revealing to actually show how it's tracking month to month? When it looks like the earnings are just going up and up and up and up, which is not the case, is it?
Well, they are. We're tracking against our year-to-date forecast position. Sorry, the prior year versus this year. So we see it as a tracking mechanism so we don't look at things as on the granular month by month, which we do in other reports. This is a summary position of how we're tracking towards year end.
Yes, but surely we could do it without being cumulative about it. You could still track it. For instance, if we look at the prior year, there was actually a drop between December and January. It would be much easier to track, surely, if we didn't have a cumulative graph, wouldn't it?
We can do that.
Yeah, thank you.
Going back to that, though, Keith, looking at that graph, I'm just not quite sure where Councillor Vandervis is coming from. That's how I would expect you would do a cumulative. That's how I would expect you would do that. Is that not standard progress, standard process?
That's how we do it. It's in a summary form here, but that's your call.
Well, I just would have done it that way. Yeah, sorry. Councillor Barker.
Thank you, Chair. I just have one question just on the graphs again. We're tracking compared to the previous year, and I wonder some of the graphs, which one is it, has the SOI target, statement of intent target. So I haven't read them in great detail, but would any of these graphs benefit from having their statement of intent target in rather than last year, given all the huge disruptions that COVID impacts on a lot of these graphs?
Some of them do have the SOI target. So if you look at the operating cash flow and the CapEx, but statement of intent targets tend to be annualized and they don't split so well by quarter. So where they're relevant, we tend to put them in as a mark, and it'll just show the annualized, the cross or the point at the end of the year.
Okay, thank you. Appreciate that.
Any other questions? Anyone like to move the report? Thank you, Councillor Raddick. Seconded, Councillor Hall. Would you like to speak to it, Councillor Raddick?
Just briefly, and that the graphs on page 514 seem perfectly fine to me, because you've got the group surplus on the left, which does dip through the December, January, February period. But the group revenue certainly has the dip showing, but also demonstrates there is substantial revenue through that summer period. And then the cumulative figure showing the actual earnings is a natural thing to accumulate, so that you see at the right-hand side of the graph where the total earnings for the year ended up. So to me, they seem very logical. So, and thank you very much for the report. I think it shows things very clearly and enables a good overview of the situation. And it's very easy to read in the coloured format. Thank you.
Any other speakers? Councillor Geary.
Oh, thank you, Mr. Chair. Look, I just wanted to say I really appreciated this, and the format's excellent for tracking progress. Look forward to the comparison as we go forward. Thank you.
Thank you. No other speakers. Right to reply, Councillor Raddick, anything you want to comment on that? No. I'll put the motion. All those in favour, raise their hands. Anyone against? That's carried. Okay, well, at this time, I'd just like to thank Mr. Cooper and Ms. Adams for coming along and speaking to the papers you've spoken to today. It's been good. I want to thank Wendy Collard for working behind the scenes and making this all function as well as it has. And just say thank you to Mr. Logie and Sandy as well. So any item, Mr. Hawkins, hand up.
Oh, thank you, Mr. Chairman. It's preemptive for your final agenda item, if we're at that point.
Oh, we got there now.
Yeah, thanks. Just apropos of the earlier discussion, I'd like to raise for discussion both for the council and council-owned companies to give consideration to signing up to the Mind the Gap register and to report back to a relevant committee or council in due course. Thanks.
Any other questions? Any other issues? If that's the case, thank you all very much for coming out to Berwick, and we'll close the meeting.